Have you ever imagined yourself sitting in a luxury supercar, surrounded by leggy models, indulging in the high life? Or maybe you've come across those enticing Forex ads that promise a quick and easy path to wealth. These are the sweet illusions marketing has planted in your mind. But what's the reality? Forex isn't some magical gateway to instant riches. It's a fierce battleground where greed and fear constantly lurk, ready to destroy everything. We, as traders, not only face a volatile market, but also have to battle our greatest enemy, ourselves. The ambition for quick profits and the fear of losses are the two main factors that trap many in the vicious cycle of overtrading. Trading excessively. This is when rationality gives way to emotions and decisions are made based on hope and fear rather than strategic plans. The result? Accounts get wiped out and confidence crumbles. Successful traders aren't those who never fail. They're the ones who learn to overcome greed, manage fear, and strike a balance in their trading. They understand that sometimes doing nothing is the right decision, and that patience is the key to success. In this content, we'll dive deep into the common mistakes in Forex trading, the signs of overtrading, and, most importantly, how to avoid falling into emotional traps. Remember, Forex is a long-term journey, not a shortcut to wealth. Instead of rushing to get rich quickly, focus on building sustainable and intelligent wealth. Greed pushes us to chase the dream of becoming wealthy overnight, while fear drives us to recover what's lost. Yet, these two emotions silently guide us down a dangerous path, overtrading. Many traders don't even realize they're overtrading. Why? Because they're too focused on the goal of making quick money or obsessed with recovering losses. In this emotional whirlwind, the strategies and trading plans that form the foundation of success are forgotten. So, how can you tell if you're overtrading? How do you know if you've turned into a gambler rather than a strategic investor? Let's dive into an analysis that will not only help you protect your trading account, but also safeguard the long-term career in trading that you're striving to build. Are you overtrading? As mentioned earlier, many traders don't even realize they're overtrading. The main reason is that they get caught up in their emotions, either chasing quick profits or trying to recover losses, to the point where they completely abandon their trading strategies and plans. Simply put, if you're making trades that don't align with the strategy you've developed and tested, you're overtrading. This assumes, of course, that you've already learned and mastered an effective trading strategy. If not, you're simply not ready to trade on a live account. To avoid falling into the trap of overtrading, it's crucial to practice in a safe environment. In this video, I'll provide you with resources to open a demo account or a cent account, allowing you to practice and refine your trading skills without the risk of losing real money. This is your opportunity to test trading strategies, control your emotions, and familiarize yourself with the market under stress-free conditions. Always remember, the market will still be there tomorrow. There's no need to rush into trading immediately. The most important thing is to learn how to trade correctly, maintain discipline, and understand that Forex is not a sprint but a long-term journey. Practicing in a risk-free environment helps you build a solid foundation, ensuring you're ready when the time comes to trade with a real account. Behaviors that indicate overtrading. Trading without mastering an effective trading strategy. Forgetting your trading strategy due to emotional influences during trading. Feeling the constant need to be in the market. After a win or loss, you immediately look for the next trading opportunity. Take the time to reflect on your trading habits and ensure you're staying on the path to sustainable and disciplined trading. Discipline and greed control, the foundation of success. No matter how many articles you read, videos you watch, or courses you take, the most crucial lesson you need to learn is this: controlling greed and managing risk. The knowledge, tools, or trading strategies you acquire are just the tip of the iceberg. The deeper and harder to control part lies in trading psychology. As I've shared in previous videos, Discipline won't make you rich overnight, but it will save you from losing money. This is the core of surviving and thriving in this market. Discipline helps you avoid impulsive decisions and emotional trading. It acts as a shield, protecting you from the temptation of overtrading and placing excessive trades that often lead to loss of control. Risk management, on the other hand, is your essential companion. In a volatile market like Forex, no one can guarantee that every trade will succeed. That's why setting an acceptable level of risk for each trade not only helps you preserve your account, but also keeps your mind steady. A successful trader isn't someone who wins every trade, but rather someone who knows how to protect their capital and maintain the mindset to continue trading. Always remember, unchecked greed and lack of discipline are the fastest paths to failure. Meanwhile, patience and discipline, though they may not yield immediate profits, form the solid foundation for long-term success. Forex isn't a game of luck to make quick gains, but a long journey requiring learning, perseverance, and self-retrieval. Strive to become a consistent trader who not only conquers the market, but also triumphs over their inner self. Staying out of the market, a crucial and valuable strategy. There's a lesson that many new traders and even seasoned ones often overlook. Doing nothing or staying out of the market is also a strategy. This isn't laziness or avoidance, but a wise approach to preserving your capital and waiting for genuine opportunities. Imagine you're a crocodile hunting by the Mara River. A crocodile doesn't recklessly leap into the water to catch every antelope that passes by. Instead, it lies still, patiently waiting for the perfect moment. One well-timed strike brings a full meal, while hasty actions only drain its energy or even put it in danger. Traders are no different. If you execute a trade that doesn't meet your strategic criteria, it's like diving into the water without knowing what you're hunting. The result? Losing money pointlessly. On the other hand, choosing not to trade means protecting your account from unnecessary, risky trades. This doesn't just save you from avoidable losses, but also keeps you in a state of readiness to seize better opportunities. Sometimes staying out of the market isn't just safe, it's a way to earn money indirectly. Remember, patience and discipline are your greatest allies in this long journey. Trade smart, not often. What if I trade recklessly and still make money? You might think, if I trade recklessly and still make money, isn't that better than doing nothing? The answer is no. To explain this, let's revisit the crocodile analogy. A young crocodile that by sheer luck catches prey while recklessly plunging into the water might feel overconfident. It may start believing that every impulsive action leads to rewards, but in reality, this bad habit will expose it to greater risks in the future. Traders are no different. A winning trade achieved by luck isn't a success, it's a dangerous warning sign. Why? When you win a trade that wasn't part of your plan, you're reinforcing bad trading behavior. This makes you more likely to repeat those actions, eventually leading to significant losses. Such trades don't just cost you money, they erode your discipline, the single most crucial element for long-term success in the market. New traders, in particular, often confuse luck with skill. A few lucky wins can give you the illusion that you're skilled, but in reality, you're building a fragile foundation based on bad habits. This foundation will inevitably collapse when the market turns against you, and the market always does. Standing, a predator's strategy. Learn from crocodiles or other predators in the wild. They don't always rush after prey. Instead, they remain patient, observe, and strike when the opportunity is just right. The same principle applies to trading. Standing aside isn't passive, it's a proactive strategy to wait for the perfect setup. In the Forex market, opportunities are endless. Tomorrow, next week, next month, the market will still be there, offering fresh and better chances. Your job is to stay patient and act only when the factors in your strategy align. Don't let fear of missing out or greed push you into meaningless trades. A simple yet effective strategy. Preserve capital. Standing aside helps you protect your account and avoid unnecessary losses. Maintain a stable mindset. Not trading reduces pressure, keeping you calm and ready for better opportunities. Optimize long-term profitability. One well-timed trade can be more effective than dozens of rushed and reckless ones. How does money management affect your trading frequency? Have you ever found yourself thinking, this opportunity is a sure win? In a rush of excitement, you double or even triple your usual stake. But cruelly, the market doesn't align with your expectations. In an instant, a significant portion of your account vanishes, and the haunting urge to recover losses takes over. You dive into subsequent trades, no longer clear-headed, no longer following a strategy. This vicious cycle continues until you look back and realize your account is completely drained. Does this sound familiar? It's a classic mistake many traders make, especially newcomers or those struggling to find stability. The danger lies in the false sense of confidence that arises if you happen to win a few times while taking excessive risks. You start telling yourself, a little more risk won't hurt. But this psychological reward system gradually pulls you deeper into the abyss of losses. This lucky streak will inevitably end, and when it does, the fall will be even more devastating. The truth is, money management is not just a technique, it's an art that keeps you level-headed amidst the temptations of the market. Remember, not every trade will be a winner, and not every opportunity is worth risking a large portion of your funds. By only risking what you can afford to lose, you minimize the impact of losses and maintain the calm mindset necessary for trading success. One thing is certain, the market will always be there. Don't turn yourself into a gambler playing a game of chance. Instead, be a trader with a plan. Protecting your capital means protecting your opportunities. Most importantly, learn to accept small losses to avoid catastrophic ones in the future. How to control and overcome overtrading. The first and most important step is to master your trading strategy. Whether you use price action, Heikin-Ashi candlesticks, or focus on major support and resistance zones, make sure you fully understand how they work and know how to apply them in different market conditions. Mastering a strategy takes time and should never be tested on a live account, where you can practice and experiment without the risk of losing real money. The link to open a demo account is provided in the video description. You can start your trading journey safely today. As I've said in many of my previous videos, fewer trades, fewer losses. This applies not just in trading, but also in life. One well-executed trade in a week can often bring more value than dozens of rush trades every day. By reducing your trading frequency, you minimize mistakes, preserve your account, and maintain a healthy mindset. There are even times when my mood isn't optimal, such as when business matters don't go as planned and I allow myself not to trade. This is an important decision because when emotions overpower logic, it's easy to make trading mistakes. Trading requires absolute clarity, and if you're not in the right mental state, staying out of the market is a strategy in itself. Additionally, if you're just starting out, focus on larger timeframes such as the daily, done, or 4-hour H4 charts. These timeframes help you avoid market noise and give you more time to think carefully and make well-informed trading decisions. Remember, patience and discipline are the two most important factors for overcoming overtrading. Don't rush. Instead, focus on building your strategy and practicing diligently. Start your trading journey on the right path by using a demo account to master your strategy and control your emotions. This phase is crucial for understanding yourself and preparing for the realities of the live market. When you're ready to trade live, keep in mind that you can receive up to a 50% rebate on commissions, helping you save costs and optimize your long-term profits. This is a significant advantage, especially for those looking to start safely and effectively. The registration links for demo and live accounts are included below this video. Take advantage of them today to begin trading smartly and sustainably. The market will always be there, but your account won't if you don't know how to manage it. Trade smartly, and remember, when your emotions are not in check, staying out of the market is also a victory.